Welcome to the Fear and Greed Business News Afternoon Report for Friday, the 18th of August, 2023. I'm Michael Thompson. Every afternoon, we've got the top 5 stories that happened today that you need to know about, so let's get going. Story number 1, the S&P ASX 200 closed relatively flat at 7,148 points, but across the week, the local bourse is down 2.6%. That is the worst weekly drop in almost a year. Australian real estate investment trusts and utilities were the top performing sectors over the day. In terms of companies, Magellan Financial Group topped the gainers, up 13.3% after it declared a special dividend of 30 cents a share and revealed plans to cut costs as well. Net profits fell 52% to $182.6 million in 2023. Abacus Group was up 10.2%. Goodman Group was up 7.3%. Now, this is an interesting story. The commercial and industrial property group is positioning itself to be a data center giant, capitalizing on the increased use of artificial intelligence. It revealed a 17% jump in profits yesterday to $1.78 billion, and it seems investors were excited enough about the data center plans to keep the share price climbing for 2 solid days now. The worst performing sectors were consumer discretionary and communication services. Super Retail Group, owner of Rebel and Supercheap Auto, that was down about 6.9% following increases earlier in the week, and we spoke about those when they happened. There have been concerns about the future of consumer spending, with some signs of slowing in retail sales. The worst performer today was Imugene Limited, down 16%. Imugene resumed trading after a halt for a $60 million capital raising for a new cancer treatment licensing deal. Finally, cryptocurrencies, definitely worth a mention, have been declining sharply. Bitcoin down around 7.5% over the day. Ethereum also recording a sharp decline. The Wall Street Journal is reporting that Elon Musk's SpaceX has sold off its Bitcoin holdings, so we'll keep an eye on what's going on there. Story number 2, the cyber attack on Latitude Group that compromised the details of 14 million Australian and New Zealand customers has now pretty much decimated the financial services company's half-year profits. It also means no dividend for shareholders. Latitude lost $98.2 million from continuing operations in the 6 months to June 30, with higher costs relating to the attack hitting the business. Latitude described the past half a year as among the most challenging periods in the business's history, which completely reshaped the financial results. The attack in March included the breach of driver's license numbers, passports, account statements, income and expense information, and bank account numbers. Operations were shuttered for 6 weeks. While volumes have recovered, the attack has cost the business $76 million in disruption and remediation, with more class actions being considered and possible regulatory fines. Claims with their insurer are in preliminary stages. Story number 3, the Chinese real estate crisis is deepening, playing havoc with the share market, threatening global ramifications, including sending the Aussie dollar sliding. China's second biggest developer, Evergrande, has filed for bankruptcy in the US. The property development giant defaulted on its debts in 2021. Shares have not been trading since March of last year. China Evergrande Group made a Chapter 15 bankruptcy protection filing in New York to help protect its US assets and restructure its debts. Another Chinese real estate giant, Country Garden, recently flagged it's expecting to see a loss of $11.7 billion for the first 6 months of this year. Real estate makes up just under a third of China's GDP. Story number 4, Coles has alerted investors that it expects its costs to be much higher to roll out 2 new high-tech warehouses in Sydney and Melbourne. Now, these are our automated fulfillment centres and will use thousands of robots to help pick and send groceries. In 2019, the supermarket giant expected the project to take 4 years to get going in a deal with a British tech business, but now the cost has surged by an extra $130 million across the 2 warehouses. The entire project is likely to come in at close to $400 million in capital expenditures and faces more delays. Now, obviously for Coles, online grocery sales are becoming a big part of the business, but this automation project is clearly facing a bit of a cost overrun. Finally, story number 5, the Workplace Gender Equality Agency has unveiled the narrowest pay gap on record in Australia at 13%. This is a 0.3 percentage point improvement on February. Women earn 87 cents to every dollar a man makes, or about $13,000 less in their annual base salary. Some of the improvements have been driven by the rising incomes of women in traditionally female-dominated industries such as education and training, healthcare and social assistance. Next Friday, August 25, is Equal Pay Day, so there will be a lot more attention on this issue and you'll be hearing a lot more across the next week. Bigger businesses are also on notice, as those with 100 or more employees in Australia will see their gender pay gap published publicly from 2024. That's it for the afternoon report for Friday, the 18th of August, 2023. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X and Facebook. Join us tomorrow morning for the weekend edition of the Fast 5 Business News by Fear and Greed. I'm Michael Thompson. Enjoy your evening.